Welcome to Life Planning 101, brought to you by Kennedy Financial Services of Eastland. Tune in every Monday morning at 8:30 on KATX and again on Saturday morning at 9 a.m. on KATX and KWBY as Angela Robinson joins Stace Gaddy to share important financial information to help you live life on purpose. Insurance, investments, estate and tax planning, and much more. All covered now on Life Planning 101.
Good morning, everyone. Welcome into the program, Life Planning 101. I'm Stace Gaddy. So glad to be with you. It is a wonderful, wonderful program, absolutely free of charge. You're going to learn so much. Our resident expert, I should say, is Angela Robinson from Kennedy Financial Services here in Eastland. Good morning, ma'am.
Good morning, Stace. Of course, I'm real happy to be here, and we have a special show. As you know, once a month, we bring on our chartered financial analyst that we have working in our office, and I can tout him or I can be mean to him because he's my brother. So yes. I have the option of that. But we are real excited to hear from him, especially because of the way the markets have been over these last couple of months. I know there's been a lot of volatility and a lot of concern out there, so you don't want to miss hearing from him later on in our show. We're also going to have a piece of trivia from the show, so make sure you listen tight because Comet Cleaners here in Eastland has volunteered to give away 3 pairs of starched or dry clean pants. So we want to make sure and listen for the trivia moments. You know, just listen close. I know Stace can't participate, and it upsets him every week. So,
still fun, though.
Yeah. And I know today's show is going to bring about a lot of questions because today we're going to talk about the ultimatum risk, I guess you could say. Stace asked me what was the name of the show today. I said risk, and that's it. Because, you know, so many times risk can be very confusing, and it sounds like such a simple definition when we hear it, but it's not. So we're going to be talking about what risk is and then potential ways to be able to do things with risk, address risk, so to speak. And we're going to have 3 different ways that you can actually address risk in the show. But what I want to start out with is a quote by Warren Buffett. And if you don't know who Warren Buffett is supposedly the greatest investor of all time, right? But he says, risk comes from not knowing what you're doing. Well, that's very interesting because that could be said the same thing about fear, right? Fear could come from not knowing what you're doing. Mm-hmm. And, really everyone out there that's listening to the show today and your next door neighbor and your friends and your family members, every one of us has a different relationship with risk. There's an old saying that we are the sum total of our experiences, or the lack of our experiences in this case, right? And that has led us to the precise point that we are in life. And some of us, because of that, thrive on risk because it has done us well. Some of us do everything we can to avoid risk because we've had situations or we've had family stories that have scared us half to death, right? And then the majority of us are somewhere in between that 1,000,000-mile range, which is huge. So, there's a lot of ways to be able to address it. But the reality is risk is everywhere. 24 hours a day, you're exposed to it, even when you're doing nothing. Sounds crazy, but that's right. And I want you to think about it. Let's talk about your health for a minute. If you're doing nothing, are you risking your health? Absolutely. You're not moving. You've got to get up and
really
move. You're really risking your health, but it works in all dimensions of life, So you're exposed to it 24 hours a day, whether it be your health, your livelihood, your financial picture, your future, and sometimes even our relationships. And none of that is something you don't know. Maybe, we don't recognize it and we don't want to face it every day, but it's something that you already know. You already inherently know that you're taking risk all the time. But sometimes it's good to just have that reality check. And the question that I want to address today is, what can you really do about risk? What are your options? And you basically have 3 or maybe 4, okay? And I only say 4 and that's if you just include, just take risk. It's 1, okay? But the importance here is for us to discuss the other 3. And the first one I want to start with today actually came from a client this last week that had a great question. They asked, how do I just avoid risk altogether? How do I not have to face it? Because here we are with this market so crazy and I don't know what to do. How do I face it? Well, you do have the option to avoid risk. The problem with avoiding risk is that it always exposes you to other risks. And I just want to use an example. Now, I am a mother of a young son, so this is going to make sense when I use this analogy. But I want you to think about a child's health. If you may have heard many young parents, they talk about, maybe especially with their firstborn, they talk about keeping their children out of preschool or similar environments to keep their young toddlers healthy. And that works really fine and dandy until kindergarten. And that an experienced parent is going to tell you in that year, they're actually going to have so many germs that they're going to be full of sickness all year long, right?
Yes.
Okay. So I want you to think about money in the same respect. You lock your greenbacks in a fireproof safe at home. What risk are you taking now? And that's really important to consider. When we come back, we're going to talk about what the risk is with avoiding risk altogether. And then our guest speaker, Aaron, is going to be coming on the show. So you don't want to miss him from Kennedy Financial Services, our in-town chartered financial analyst.
Absolutely. Look forward to it. Angela Robinson, I'm Stace Gaddy, folks. You keep it right here. You're not going to want to miss the next segment of Life Planning 101. We're back after this. Welcome back, everyone, to Life Planning 101, brought to you by Kennedy Financial Services here in Eastland. In fact, featuring some of their great talent there. Angela Robinson is our resident expert, but we also have a special guest. Good morning again, Angela.
Good morning, Stace. And yes, I do want to introduce our special guest. And I gave you a teaser right before the show, and I'm going to still leave you hanging about what risk you are taking by avoiding risk altogether. Because we're actually going to finish up our show talking about that risk. We're going to talk about 2 other options that you can do to be able to address risk in today's world. And then I want to make sure that you are listening in, because we are going to have some trivia at the end of the show, and we're going to be giving away a prize for that. And also make sure you've got your questions ready, and you can email us at lifeplanning@kennedy-financial.com. The best question of each week, as you know, gets a warm, creamy box of donuts. We love to give away those donuts, even though I try not to eat them myself. So let's get to our special guest for today. I know it's really important with all the crazy stuff that's gone on in the market. And of course, this last weekend, and I actually heard, has been the best week in the market this year, which is crazy. It doesn't even feel like that, especially for me. And I'm in the business, and I watch things every day. So we're happy to have Aaron Kennedy with us this morning to kind of give us a market update. And why don't you just lead off by telling us a little bit about what's going on?
Oh, good morning, everyone. We've been pretty spoiled as a society here in the market, or as investors in the market. We've gone since 2011 without any kind of meaningful correction, but we've definitely got one over these summer months. If you look at the market, the S&P was down about 12%. Emerging markets were down twice as much as that. If you look all over, MLPs are down about 30%. Biotechnology is down about 30%. So there has been a very meaningful correction going on in the market. And since the beginning of October, it's really turned around. The S&P's back up 5% right now. And it's basically because it's relieving a lot of the stress that we've seen in the market. The 2 things that were really driving things down was China's growth rate and what Janet Yellen was going to do with interest rates. An interesting thing that happened this week was the Treasury, they actually issued treasuries at a 0% interest rate. And why this is important is the Federal Reserve has a dual mandate. One is to keep full employment, and the other is to control inflation. Now the Fed is looking for 2% inflation for our markets to be healthy. But at this point, with that 0% treasury that was issued, that should be a direct proxy for what inflation expectations are supposed to be. And that's at 0. So at this point, it's going to be extremely hard for the Fed to raise interest rates with a slowing global economy and with inflation expectations here at 0. So it's kind of been a wind in our sail over the last several years of all this easy money from the Fed, and it looks likely to continue on.
And Aaron, you bring up a very good point, because in our show today, we're actually going to be talking about inflation. And inflation, as we think about it, we think about with our food cost and our gas cost and things like that. So question I have for you is, when you talk about 0% inflation, and I go to the grocery store and I don't feel 0% inflation, what is the discrepancy there? What's happening with that?
Well, the numbers that the Fed really looks at is not real. They take out our food costs and our energy costs. Most people, that's their largest expenditure. You can't go through life without eating or driving your vehicle. So although we are feeling this inflation, the Fed really doesn't look at that in their measurements.
Last time you were on the show, which was a couple weeks ago, or about a month ago, I guess, and you talked about you were very bullish at that time, thinking that it's a great time to be an investor in the markets today because everything was going down. And do you feel like just since we've had this pop in the market that's still a trend that we need to keep buying, or is it something that we really need to reassess where we're at today and do something different?
The market is down as a whole, and it's overall, on average, trading about historical averages at this point with the correction. So that's a very good thing. But the important thing is if you really dig into the S&P, there are some really strong quality companies that you can buy on sale right now. If you are looking for those good deals, it is a wonderful time to be investing. But to blanketly just go out and buy the S&P, there's probably going to be some more rough spots.
Yeah, and I would totally agree with that. I do think, especially because I know a couple weeks ago we looked at the S&P 500 in comparison with the world markets since 2008. And it was ungodly. I mean, the S&P had returned, and you don't quote me here, but it was over 40% or 50% since that time. But the world markets had done like 7%.
Yeah, I think it was even a little less than that, 5%. The world as a whole hasn't really done anything. Living in the U.S., we are very biased about where we want to invest, and we want to invest in things we know, and that is companies here in the U.S. But if you look at the global world, and that's really what we're living in, the U.S. markets are a very small percentage of the U.S. or of the global markets. We're less than half of it. So we always have to remember it is very prudent to have a global portfolio. It not only reduces your risk, but it should increase your return over time.
Good. Well, thank you again so much for being on the show with us today. We really appreciate you being here with us monthly, Aaron. I know it gives our listeners a lot of insight to what's happening in the market that I can't give because I don't sit behind a computer studying it all day. So when we come back, make sure you stay tuned because we're going to be finishing up on risk and ways to be able to manage that risk inside of your investment portfolio.
Much more Life Planning 101 right after this break. A huge thank you to all of our sponsors here at KATX Radio. In particular, we are talking about Kennedy Financial Services, one of the great sponsors here in Eastland County, and bringing you this program, Life Planning 101. Our final segment this morning, Angela Robinson, we're talking about risk today.
Right. We're talking about the different ways that you can be able to mitigate risk or have options to address risk. And the first one that we're talking about is avoiding risk altogether. And the question that I left you with at the first part of the show was, when you avoid risk, what risk are you really taking at that point? Because we think avoiding risk just all of a sudden gets rid of every other risk. Well, that's not really true. It actually exposes you to other risks. What I want you to think about is Aaron was so kind to come on and talk in the middle of the show about inflation and what we're actually experiencing as consumers with the food that we eat and the gasoline that we purchase. And that is a huge risk to all of us. And we call that just basically the cost of living going up every year. And what I want you to imagine is I want you to think back maybe 5 years ago or 10 years ago. Did you spend more or less at the grocery store?
Less.
Well, yeah, absolutely.
Much less.
Much less. In fact, I remember I used to call Walmart the Century Store because every time I went into Walmart, I'd spend $100. Well, I can't walk out of Walmart without at least spending $150 to $200 now. Mm-hmm. So there's a huge discrepancy that we don't even see. It's a kind of a hidden risk, and that's what happens when you avoid risk altogether. Is you're faced with something called inflation. It's a little thief of your money. And there's a lot of analysts out here that will actually tell you that the current rate of inflation that we're experiencing, even though the government tells us is zero, the risk that we're faced with is about 4%. Think about this. $100 this year is only $96 next year. So what are you going to put back on the shelf when you go to the grocery store? What about the year after that and the year after that? So we call avoiding risk going broke safely. for good reasons. Yeah. So
and slowly.
Drip, so
drip.
That's right. And it can be very painful, especially for retirees that are on a fixed income. So I don't always think that is the best answer. Okay. And then the second option is to transfer risk. Okay. And this is what you do when you actually insure something, when you insure your home and say your home burnt to the ground. It would be devastating if you didn't have homeowners insurance. So we insure our homes. So that's called transferring risk, when you do that. And you can actually do the same thing with your money and your investments. You can insure your retirement income. You can insure a certain value of your investments at some point in the future. Now, just like anything else, like we talked about avoiding risk, there are other risks associated with transferring risk. The number one thing is cost. There's an old saying that if it sounds too good to be true, what?
It is.
It is. That's right. So who wouldn't want to guarantee their retirement income? Well, you can do it at the guarantee of the guarantors, like the insurance companies, but you better know that it's going to cost you in both dollars and time. And it's going to get hairy when you're looking at those guarantees. You better have someone that can help you walk through that and know exactly what all the what ifs. I will tell you this. We have had years of experiences of people bringing us in investment products that had guarantees on them that they had purchased previously that were no better than avoiding the risk and going broke safely, because they weren't able to get to their money, and they were in such a deep hole that was the only thing they'd be able to rely on, and that they were going to have a fixed income for the rest of their life. And so, they were inevitably going broke safely. Now, I want to be clear here. I am not anti-risk transfer. I think there is a time to do it. I think you have to do it with caution. And the bottom line is that it's not black and white. You have to have someone that not only understands the products that are out there to be able to help you, because sometimes it is a fact of, are you sleeping at night? And if you're not sleeping at night, we need to get you to a point of sleeping at night where you feel comfortable about where your risk is. So it can fit some people, but it needs to be with someone that knows your unique situation, your future and goals, your family dynamics, and is working with all of that with the knowledge of what these products actually are, because they can be very, very scary. So I just want to put those feelers out there for that, because I think that's really important. And then the last option that you have with risk is to manage it. And there's, a saying I use all the time. I think wisdom is more powerful than knowledge.
Okay.
Managing risk is simply following conventional wisdom. Let me just give you some sayings you've probably heard. Don't put all your eggs in one basket.
Right.
An investment in knowledge pays the best interest, Benjamin Franklin. Be greedy when others are fearful, and fearful when others are greedy. That's what Warren Buffett says. So in other words, what he's saying is buy low, sell high, right?
Right.
When it comes to investing, buy often. Those are all little words of wisdom, and we can manage risk through those words of wisdom. Now, we call this in our office the T-ball approach. It isn't perfect because you're not trying to hit home runs, and it's not exciting. In fact, it's kind of like watching paint dry on the wall. It's a very boring process. And when the S&P goes up, like what we just saw over the last several years, where we were talking about in the last segment with Aaron, when it's gone up over 40% and the whole world has only gone up like 7 since 2008, you're not going to get that 40% home run because you are managing your risk. You're going to have more of around the 7% or less. In fact, I did read an article last year that said if your advisor made you more than 5% this year in your portfolio, you need to fire them. Because they're taking too much risk. And I think that's what we're accustomed to, is we're seeing so much out there right now because the S&P, but that's not managing risk. You're putting all those eggs in one basket. So you have to really think about how you're putting all that in perspective. And, most of us fall in that in-between range risk solution between all these options. So again, I think it's just really important to be able to assess your situation and have someone help you, so you're not making an emotional decision, but a logical decision with your money. So let's get to our trivia. Remember, life planning at Kennedy-financial.com. Email us your answer. Comet Dry Cleaners has offered 3 pairs of pants, either starched or dry cleaned. And this is a fill-in-the-blank trivia, so it's kind of fun this week, okay? All right, and we just went over it, so you can't miss it. It's buy blank when others are fearful. and that was by Warren Buffett. So if you know the answer, send us an email, lifeplanning@kennedy-financial.com. And don't forget to send in your questions to the same email address, lifeplanning@kennedy-financial.com. We do give a warm, creamy box of donuts every week for the best question of the week. So we want to be able to hear those, and we will address them on the show as you have heard us do in the past. So thanks again for joining us. My name is Angela Robinson with Kennedy Financial Services, a life planning firm, because what we want to do is help people live life on purpose and not by default.
Angela, before we go, list those three options again. The last one was manage, but the first one, when we're talking about risk, one more time for me.
Yes. Avoid risk.
Avoid.
Transfer risk.
Yes.
Manage risk, or just take it, right?
Okay.
Yeah. And again, you have access to our articles too. So
Yes.
you can go online and be able to read this and really take an assessment for yourself of where you're at.
Always great information. I learn something every time, and I know that you do as well, folks. Take advantage of this. And again, the nice announcer coming up after we finish here will tell you all about our programming schedule. But don't forget, if you missed any information, as Angela said, katxradio.com or kwbyradio.com. These programs are archived in their entirety for your listening pleasure, and you can also read the corresponding article. Take advantage of this. This is free financial information. You know how much this would cost you if you went in to a regular place to get the information you're getting? I'm serious. Think about it. Okay, for Angela Robinson and Aaron Kennedy and everyone at the fine firm of Kennedy Financial Services, I'm Stace Gaddy. You join us again next time.
Thank you for joining us for Life Planning 101, brought to you by Kennedy Financial Services of Eastland. Tune in every Monday morning at 8:30 on KATX and again on Saturday morning at 9 o'clock on KATX and KWBY for more Life Planning 101.
Securities and investment advisory services offered through VSR Financial Services Incorporated, a registered investment advisor and member of FINRA SIPC. Kennedy Financial Services is not owned or controlled by VSR Financial Services Incorporated.